manage their resources in such a way that, I mean, they could still take something tangible. Youth service. I don't know why core members came to mind, but then again, I feel like talking about savings in Nigeria. When I had the conversation about how many Nigerians have savings, and some of you are saying, Denise, what are you talking about? Have we even finished buying, taking care of these things? Are telling us to save for the rainy day. On Talking Figures today, we are diving into a topic that touches every wallet and every bank account in Nigeria. Savings and how to truly earn from them. With rising costs and economic changes, simply putting money in the bank might not be enough. We need to understand how to make that money grow. And we'll be talking about interest rates, the pesky fees that eat into your earnings, and the taxes that may or may not be involved. To have that conversation with me is someone I am seeing for the first time, who may also be seeing me for the very first time. Mr. Eseoghene Ejogbamu is the second vice chairman, Chartered Institute of Bankers of Nigeria, River State Branch. So it's safe to call him a chartered banker. Welcome, Mr. Eseoghene. Thank you for joining us.
Yeah, good afternoon.
Okay, so let's dive right into the conversation, shall we? For the average listener, what is the typical interest rate on a standard Naira savings account right now? And what factors in the financial market influences that rate? But before you answer that, let us start with what a basic savings account is.
Okay. It has to do with the purpose. Why am I keeping accounts in? Why am I keeping money in that account? I want money to be in the account because I want to save that money. So that money should be in a savings account.
Okay.
But if I want to put money in an account because I want to do business, I want to give out checks to my customers or to my staff, then I should run a current account.
A current account.
So what makes an account savings or current is the purpose why you are keeping that money.
In Nigeria, everybody has a savings account, but some of us are not saving. Some of us just use that account as a medium to receive money and send out money.
Yes, that is what will take me to my next point. You know, the requirement for current account and savings accounts differs. So most people tend to meet the conditions for savings accounts. So even if the purpose is not to save, they end up putting money in that particular account because that is the one they could meet. And even in the savings account before now, we have what we call the 3-tie KYC. And if you're unable to meet some certain conditions, you may have tie 1 or tie 2. And that will limit the amount of money that you can put in that account. That say, oh, I have student account. They said I should come and upgrade my account. If not, I cannot withdraw this or this cannot come in. So that's that.
Okay, so now that we've established that, what is the typical interest rate on a standard Naira savings account right now, and what factors in the financial market influences that rate?
It's not cast on stone because even though it has a range, but different banks might differ, little by little. Then the different players in the financial sector, when I talk about the commercial banks, the mortgage bank, merchant bank, microfinance bank, the fintech, the mobile money operators, and so on and so forth. So they have different rates, but in general, I know that a savings account will definitely not have up to double digits interest rates, meaning that most of the interest rates are less than 10%, and they are usually more than 3% now. So basically between 4 thereabouts to 9%. People play around.
Okay, and this is monthly or per annum?
Per annum.
Per annum.
Yes.
But then people.
You can be paid interest even every day, but that does not mean that it's not per annum. The computation is per annum, but that doesn't mean that they can pay you every day. They can pay you every month, but the computation
It's per annum.
Yes.
It's per annum. Okay. Now you talked about the tiered, the 1 tier, 2 tiers, and all of that. We hear about this tiered interest. Could you explain what that means and how a saver with a higher balance can potentially earn more?
Okay. The 3-tier KYC is different from the tiered interest. There are two different things.
Different things. Okay.
There are two different things.
Okay.
That 3-tier KYC, those days, before we start having other qualifications of accounts, the simple thing was just for you to have an ID card or your photograph and so on and so forth.
The passport.
So the 3-tier KYC is saying that if somebody has just passport and ID card, for example, and the person does not have NEPA bill, which is it must not be NEPA bill. What we are referring to is a utility bill. You don't have that, so you are not qualified for the O package. So you can be in type 2. Then maybe somebody has BVN and does not have this, does not have that. So you use that one to qualify how much the person can save, or how much the person can withdraw, or what will be the maximum balance in the account. That is the 3-tier KYC. And that one we are talking about know your customer.
Okay.
So that is a different thing altogether. But when you talk about tied interest, in some banks will say if you are having 100,000 naira, for example, interest rate for 100,000 is 5%. But if you are having 200,000, the interest will be 6%.
Okay.
For example. Now, even for the tied interest, there are two different types.
Okay.
You have the whole balance, and we have the branded tied interest. Now, what's the difference? If you talk about the whole balance, it means that if you are having 1 million, this is the interest rate. But if you are having up to 2 million, this will be the interest rate. But for the branded, if you have 1 million, this is the interest rate. If you have more than this, that other part will have a different interest rate. I know some fintech do it, that for the first 100,000 or the first 1 million, this is what the interest rate will be. Then anything more than that will have a different interest rate altogether. You understand? So that's the difference between the two.
That's the difference between the two. So does that mean that someone with a higher balance can potentially earn more?
In most cases, yes. In most cases, yes. But there are some banks, because I've observed it with some fintech. I will not call names anyway. There are some that you might even earn less, kind of, as in your first 100,000, for example, might have a higher interest rate. Then any money after that 100,000 might have a lower interest rate. You understand? Why some? The opposite might be the case. It all depends on the policy of the bank.
It all depends on the policy of the bank. Okay.
And the product.
The product.
Yes.
Okay. So now, in today's economy, are the interest rates offered on savings accounts enough to beat inflation? I mean, everybody is offering interest. From the fintechs you mentioned, the regular banks you mentioned. For some people, they have the ones that, like you rightly said, it comes daily. For some, it comes monthly, but together it is registered or documented as per annum. Can these interests, whether high, whether low, beat inflation? And if not, what does that mean for a saver's purchasing power over time?
Are you referring to year-to-year inflation, or?
Well, when we looked at the last what's it called?
It's okay. Let me just be general, because I don't need to go into too much of technicality. I will not be in a hurry to say yes.
Okay.
Because inflation these days has been moving, at a very high rate. And it's almost impossible for interest rates to meet up with the rate of inflation. But why do people save? People don't just save because they want to double their money. There are different reasons for saving. Apart from just trying to keep the value, we also have speculative purposes for savings. Now, people also save for unforeseen, because anything can happen. You can just fall sick, your roof can just go off, anything can happen, and you will need money. So there are different reasons why we save. We are not just saving because we want to make money. If you are not staying in your own house and you're on rentage, and your rent is expiring every January, every February, you might not be able to come up with that money once it expires, unless you have the culture of saving every month towards that rent. If you have school fees to pay, the same thing, you save towards that and pay. So people don't just save just because they want to make a gain out of it. There are different reasons why people save. So it's not just about making gain. So savings is a culture that everybody should abide.
And it's not just about
inflation or no inflation.
Inflation or no inflation.
Yes.
All right, thank you very much. Now, what is the difference between potential earnings, or the difference in potential earnings between a regular savings account and other structured savings? I mean, sometimes your bank is offering you these products. Bank offers like target savings plan, or a fixed deposit account, or like some of the online banks now, they have even there's a lock account where you put money there, and you cannot have access to it for a period of time. And if you try to access it, you lose a percentage.
You are going to product development now. People can just come up with different names. It's all the same thing. Savings is savings. But for promotional purposes, they give different names to different things. But that is different. But for the fixed deposits, that is a different thing altogether. It's different from this target savings that you're referring to, where people say save for school and build it around payment of school fees. Or some people say save for Ember. You save towards Christmas.
Thanks for the reminder.
Save for this thing. Or you are saving towards a project or something like that. Or marriage. Or you are saving towards acquiring of assets, both fixed and movable assets. So there are different products that banks will bring just to encourage savings. So people can be very creative with their very funny names and captivating names and all the rest. But they tend to give a little bit higher than the normal interest rates to attract more customers for those target savings. Most of the times it might be lower than another bank, but inside that very bank, if the savings interest, for example, is 3%, and they want to bring a target savings, they will make it 4 or 5 or 6. They will want it to be higher than the usual one in order to entice people to come. That is just the normal thing. So, but for the fixed deposit, it's a different ball game, because the fixed deposit account is not the regular savings account. Because for the regular savings account, you have access to those funds. You can withdraw that money anytime. For more, the only thing is that they will tell you if you withdraw more than 3 times, or if you withdraw up to 4 times, or more than 4 times, you are going to lose the interest for a typical savings account. But for the fixed deposit accounts, it's just like the lock account that you are trying to talk about. You understand? But the commercial banks and the other relevant don't use that kind of word. It is probably the fintech that can make use of that kind of language. The fixed deposit is that there is a fixed tenor. When you say I'm fixing 1 million naira for 90 days, for 180 days, for